Hi everyone and welcome to Trades of the Week with myself, Dennis, and I'm in London, as you can see, together with Keith Sullivan. And in today's episode, it's going to be very special because we're going to talk about if the markets have reached its bottom and if we are now finally seeing a rally to the upside. And also, we're going to speak about that Coinbase Pro is shutting down their Pro service. And what does this mean for you as a trader and investor? You're about to find out in today's Trades of the Week. Alright, so let's dive into it. And before we do that, you do look taller today, don't you?
Yeah, because you're here. Normally I look like 4 foot. So I've had to kind of grow. So I've been eating oats all morning.
You're eating oats all morning and you're standing on a stool.
This is the Keith stool.
The Keith stool.
The Keith stool. It makes you look 4 foot taller.
Well, we do think Keith is sexy nevertheless. It's not about the size.
Hey.
So, that being said, let's jump into it. Well, let's review what have happened with the Buffalo strategy since last week. So the first one is on DOC, that's the Physicians Reality Trust. We closed at 1.7% profits, so that's worth a moo. Excellent, Keith. We have practiced this all night yesterday, so we're sinking. Next one is Interactive Brokers Group, and we closed at 0.5% profit on that. So that's so important that when we are in profit, that we lock that in. We never want to turn a profitable trade into a losing one. So this here is also worth a moo. Excellent, Keith. You do sound like a cow, I must say.
Thank you.
You're welcome. And the next one here is a no trade. So we did on ODP. And it just carried on down. We do have a stop order, so we get in as it's pushing up. But now we had a no trade on that. So that's canceling. And the next one is, I'm not really sure what happened here. Oh yeah, we have a 0.5% profit. Let's pull that up. We have a 0.5% profit so far. We're just measuring currently. So do your own research on that. We're not moving our stop loss until we're up at least 1%, maybe more. So we'll see how the markets develop. And then we have NVEE, that was that one. So this is NV5 Global Inc. So before we get into the new ones, Keith, what is happening in the market? Have we seen the bottom? Do you have a crystal ball?
Yes, I haven't got the crystal ball yet, but that's a great question. And it's a question that the investors are asking themselves every second of the day. Have we now seen the bottom of the market?
Yes, it's time for another of our amazing crypto giveaways. Now this time we are giving away more than £30,000 worth in prizes, and there will be 5 lucky winners, not just one, 5, each receiving an incredible prize package worth more than £6,000. Now this might sound like a joke. Have we gone mad? No, we're 100% serious, and by July the 31st, 5 lucky people selected at random will be enjoying these fabulous giveaway prize packages. Now each package includes a one-on-one coaching session with one of our traders, £500 for you to trade cryptos with, a financial strategy call with our newly announced CEO, John Castro, and a 1-year access to your crypto club, which includes hundreds of training videos, webinars, Q&As, and much more. Plus, a whole raft of IM merch, including books, hoodies, and they are amazing, I love them, mugs, mouse mats, and so forth. And all you have to do to be in with a chance of winning our phenomenal prize package is simply just click the link, so we can verify that you have done the following. Now I repeat, you must click the link to take the following actions. You need to subscribe to our YouTube channel, like the video, leave a comment saying done when you've completed these steps. Really, really simple. And for a bonus chance to win, join our exclusive private Facebook group, which you should be doing anyway. Now each entry is worth 5 points. The more actions you take, the higher the points you will receive. And that's it. No strings, no small print, no chicanery, no dodgy Dogecoin, unless you really want some when you win. You can enter right now by clicking the link below. Now you must click the link to enter. Make no mistake about it. This is a potentially life-changing moment for you because our prizes are basically everything you need to get started with crypto trading and, more importantly, training. It all starts with education. And this giveaway, worth a cool £6,000 plus each, is the perfect way to make a start. What have you got to lose? Oh, nothing, just the chance to win. So click on the link to earn some points. Remember, there's 5 people, not just one. Okay, so you have a great chance of winning. And look forward to July the 31st when you will find out if you are one of our 5 lucky winners. We can't wait to reveal all in just a few weeks' time. See you then.
So previous trades of the week, we spoke about how undervalued the market was, how sold off the market has been. So if you want to know more about that, please look at the previous episodes. But what we're seeing now is a slight recovery. So the first thing I want to have a look at is this, the DJI, the Dow Jones Industrial Average. And as you can see, over the last few days with the Dow Jones, we seem to have bottomed out at 29655. And then the market has just been rallying up, rallying up, rallying up. Now, what is the main reason behind this? Is the economy getting stronger? Not really. The main reason that we're seeing this kind of relief rally is because it's coming to end of quarter 2. Investors and the investment funds need to rebalance their equity books. Okay, so they need to be buying into equities to balance it up. And they say it's called window dressing. So it makes their balance sheets look good at the end of quarter 2, and then in quarter 3 they can sell back off. So we are seeing a buying bias right now in the market. Institutions are having to buy before the end of the quarter. Now, the other side of the coin is end of quarter 2 will bring the GDP news. And this is where we're going to see if the economy is going to be a negative GDP for the second quarter in a row, which then gives us that indication of a recession. So that could potentially mean we might see a recovery until the GDP news, and then the market falls back down. What does this mean for us? The main thing that we need to be looking at is our current investments. We're not accumulating right now. Why? Because the market's just not falling at the minute. We are now looking at, is there any investments that we're taking in that we're able to take profits? And that's the main thing we really need to be looking at, is how can we take advantage of this type of movements in the market? Because obviously falling markets is where we've been accumulating. So as you see with the Dow Jones, as that market was falling, we were accumulating some of the strongest companies which cannot go to zero. And now as the market's recovering, it's our time to take profits. Okay, and this is why we're now going to be focusing on, with our current VCAs, where is our average cost and where is the market going to? And then does it mean when we're 15% we take all of the money out? No, we put a stop loss in place because we don't know how high it's going to push. It could push back up to the resistance zone of around 32,000. If it breaks that, it could go all the way back up to 33,000. We just don't know, okay? But it's looking like a good short-term relief rally, which we need to take advantage of and start milking some of our profits. Other news is we've got earnings quarters obviously coming up in the next couple of months. So we need to be watching out for them when it comes to Buffalo. And that's going to put a real shock into the market, because naturally in a recessionary environment, earnings are naturally down 15 to 18%. Right now, they're only down 5%, which shows us there's a lot more wiggle room for the earnings to carry on dropping. So we need to be very careful here, but let's take advantage of this short-term move and then see what happens in the following weeks. And the strategies that we teach follow what the market does. So even if the market falls, we know what we do. And if the market recovers, we know what we need to do using the strategy. Now, last thing I'm going to show, so here is fear and greed. So in the stock market, we were at extreme fear last week, and now we're coming into fear. So it's showing that social sentiment is improving, that more people are willing to buy into the market. So this is the other sign that we could be potentially seeing a short-term push up. But do you have anything to add?
No, I think that's perfect. And the message really is, especially with the Buffalo, is to keep following the strategies, of course, because we are always hedged. It doesn't matter if the market goes up or down. So with that being said, we do have 2 new ones we want to have a look at. So the first one is Coty. So that is Coty Incorporated. It's gone up now to the resistance, and now we're placing a stop order below. I think the stop loss should be a tiny bit higher, Keith. And hopefully then we have a downward trending support as well, which is not drawn out. You have to see it here. Choof. There we go. And hopefully it's going to go down there. We do like the fact that we get lower highs and lower lows all the way down as usual. But the one thing I'm waiting for now is...
red candle.
Exactly. We're waiting for a red candle, which we hopefully will get then if we get that reversal. So the second one, since we might have a rally in the shorter term, we also want to add another asset, which is OASE, that's Oasis Petroleum. So the oil and gas industry has been doing really well, and partly due, of course, to the situation in Russia with all the sanctions. And we know there's a shortage now, for example, of gas in Germany, and we, of course, hope and pray that that's going to be solved very soon. However, we do have an opportunity here with a buffalo strategy. We have a nice looking ranging buffalo with higher highs and higher lows. That's hopefully going to play out, and we do have this amazing green candle that we're looking for, so hopefully that's enough to push the markets higher. But do your own research just as usual, and comment below, are you getting into these? Are you getting the results? We're up 2.2% this week. Since last week we closed those profits, and do you get those results as well? We would love to hear, so please comment below. So with that being said, let's jump over to cryptos. Now, cryptos, Bitcoin has been on a roll. I mean, not really, but we saw a low actually on the 19th of June or so, 18th, 17th of June, somewhere around there, of roughly 17,600 depending on what exchange you're looking at. So Bitcoin really collapsed under 20,000, but recovered quite quickly up to 21,000. So now we need to see what happens, but until we're creating higher highs and higher lows, we are in a bigger correction / bear market, if you like, but a bigger correction or a bear market. So the question is, what do you do now? So what we do, for example, is that we're following the strategies. So if you think and believe in the narrative of cryptos, blockchain, and Bitcoin, and you believe Bitcoin will go up to 60, 70,000 where it was just a couple of weeks ago or months ago, then why not buy at 20,000? Many people, when Bitcoin was at 50,000, would wish Bitcoin was at 20,000. Well, maybe you were one of them. But now when it is, you think, well, what if it goes lower? Well, it doesn't matter in the longer term. So as long as you use a solid strategy, and we do not believe, we are buyers because we don't believe Bitcoin will go to zero. So just do your research, but we are really positive with everything that's happening in the market. And just to mention a few things, we have, for example, Coinbase. I mentioned that in the beginning, that Coinbase is a company that had two platforms before. Coinbase Pro, the Pro version, which was a little bit more difficult to use, and then Coinbase, which was easier to use but more expensive. They're now merging those two. So closing down Coinbase Pro, merging everything into Coinbase.com, and adding an advanced section there. So I don't think there's any action to take. They're probably going to move the funds over automatically, but just to prepare, you could of course move the funds yourself. And also speaking about development in the industry, I want to mention a few projects here. The first one is Matic. And actually, if we can get Matic up on the screen here, Matic has fallen so much. But there's some good news here. Now, after a lot of users on Coinbase said that they would love, because it's very expensive to send coins across exchanges with the Ethereum network. And they now added support for the Solana network and also the Matic network, which means you can now send coins out of Coinbase, maybe to Binance and other exchanges, a lot cheaper. It's going to cost you less than what it does in the bank, which is great, which is the whole intention. But now, Matic has fallen a lot. If you look from where it was at its high, I think it was roughly $3, all the way down, 2.7, 2.9-ish, all the way down, it's down 82%. So not only have they been added as a support on Coinbase, they've also actually are very close to having a neutral carbon footprint, which of course is very important in today's world to also take care of the nature and Mother Nature, I would say. And they're doing that. So I think they're making some really good progress. This is a project we are investing into. We really like this. And then there's Polkadot as well. I want to mention Polkadot as well because that's also a blockchain, a layer 1 competitor to Ethereum. But during this bear trend we've been seeing, when the market has been going down, we have seen one of the most amounts of accumulations by bigger funds. I think it was something like 28 out of 80 funds have invested into Polkadot. Let's see if we can get that up as well. This is also one we're investing into with the CCA strategy. And as you can see, we're down 80%. We've gotten in at minus 50, 70, and 80% on this. So we are well prepared for the next move up. But now it's the most important time to invest, maybe even lower, right? Minus 90 will be the most important time to invest. So make sure, and this is what we're making sure, that we have money on the side, we have cash reserves, so we can invest all the way down, because we know what happened in 2017, and we are prepared for the next bull market to come as well, which is going to be very exciting. Are you excited about that?
So excited.
So we're super excited, but no emotions. That's very important, though.
No.
Is there anything to add on cryptos there?
So in regards to crypto, as you said about the Matic side and the Solana, what that also allows Coinbase to do is expand the amount of coins that it's able to list, right? And that in turn helps the Coinbase company, because I know that's something we had a VCA on. So I think that's a great development with Bitcoin. We may have seen the bottom, we don't know yet, but we do now need to start seeing a recovery. But there's a lot more adoption. I think we were speaking this morning that more people are willing to buy than sell at the minute. So the social sentiment is on the buy-in bias rather than selling. So that is a great indication for us, because it means we can go, okay, if the bigger whales, and we're not talking about the country, we're talking about the people who are buying and drives the market. If they're willing to buy and hold their cryptos, the major coins, then they must have faith that we may have seen the bottom and the market to recover up. But no emotion, remember.
Yeah, exactly. However, right, maybe they're buying now, but they might be buying lower as well, right? So they might be accumulating, and this is why it's so important to have a strategy. Let's round this up by jumping over to VCA as well. So looking at the VCAs we have been adding to a few positions. So look over your crypto portfolio as well, but we're highlighting Matic and Polkadot today. So looking at Disney, we added a new entry at minus 54%. Very exciting this, to be able to get in lower and add more money to it. That's awesome, because Disney will not go to zero, right? So remember, that's one of the rules. Asset cannot go to zero. And then I think it was in Barrick's Gold as well. This is a gold company, went down 30%. We're seeing some recovery in gold, which is good to see. And what else do we have? Yes, and then also what we are adding now, just because we have some uncertainty in the market, we might be in for a longer bear market. And of course, we'll try to let you know as soon as we can, but we do want to be hedged. So we are looking at a silver ETF. This is the iShares Silver Trust. So an ETF over silver really tracks the price to some extent, but it's a basket of silver miners. And what you can see here is we're down 20% from the high, which allows us a first entry point. And silver is definitely an asset. They can't go to zero. And who knows, it might actually even thrive if the market goes down a lot more. And when I say the markets, I mean the stock markets and all the assets in there. So silver is a good one, we believe, to have, and that's one thing to just write down, that you need to be, well, we are at least diversified into different assets. So cryptos, stocks, we're long and short because we don't know what's going to happen. We invest into everything from tech to retail, but even into silver and gold. So the importance of diversifying is crucial for your success longer term, we would say. So with that being said, I think it's time to look at the results, Keith.
Yeah.
Are you excited about the results?
I'm so excited. Here we go.
Excited. Let's see here. All right. So the results here, 28th of June, we see the Buffalo, we're up 2.2%. We closed those. Remember, we got stopped out at the profit when we lowered the stop loss. No change on VCA, on the money invested. No change on CCA or small cap. But worth mentioning here is, of course, that we are down on our current positions. This is just closed profit on the money invested, but we would be down on our overall crypto portfolio at the moment. So, and that is normal. That's how it should be with the CCA and small cap and VCA until then the market turns. So with that being said, thank you so much for watching Trades of the Week today. Really hope you enjoyed it. And we hope you also can take some action based on that. Maybe look at Matic, maybe look at Polkadot. And if you also enjoy what you're seeing, make sure you click that subscribe button, maybe even the alarm bell, so you get those notifications so we can update you on a weekly basis. Not only that, make sure you press that like button and leave a comment as well. What are you doing in this market? How can we support you? And do you have any questions? So comment that below. And with that being said, from myself, Keith, the whole team, and the stool, have a very successful week, and we look forward to seeing you on the next Trades of the Week.